Good morning, everyone. Thank you for joining us. UNCTAD will publish in about an hour the World Investment Report 2023. I have the pleasure to welcome SG Greenspan. Rebecca Greenspan will present the report first, and James Zhan, Director of the Division on Investment and Enterprises, will dig a little bit deeper into before we take your questions. Without any further ado, I will give the floor to the Secretary General of UNCTAD, Ms. Greenspan. You have the floor.
Thank you very much. Good afternoon to everybody. Thank you, James, for being with us. James is sick at home, so I hope you are feeling better, James, and thank you for being with us despite your health. So welcome to the launch of the 2023 edition of the World Investment Report, and really thank you, all of you, for joining us. As every year, UNCTAD, through the World Investment Report 2023, provides the latest trends in global foreign direct investment, greenfield investment projects, and international project finance. So these reports this time also includes a key review of the investment needs at the midpoint of the 2030 Agenda for Sustainable Development. That's one of the things we are going to talk about. And the second one, and very importantly, the report addresses the challenge of our time with a clear call to action for investing in sustainable energy for all. So the sustainable energy agenda, the investment needs, and what needs to be done is a new feature of this year's report. And as I say, we are calling for action for investing in sustainable energy for all in the developing countries, and we will talk about that too. So the report identifies international investment bottlenecks that risk holding back this transition, the sustainable energy transition for all, and provides concrete policy recommendations to avoid these bottlenecks and these risks. But before looking at the investment in sustainable energy issue, let me first turn to current global investment trends and prospects. That is the first part of the report. So the prospects for international investment looked extremely gloomy last year in 2022. We saw rising inflation, fears of recession, turbulence in the financial markets, and that caused investor uncertainty around the world, putting many investment plans on hold at the beginning of 2022. However, at the end of the year, international investment flows suffered, but proved to be more resilient than what we thought at the beginning and at what was expected. So despite the fact that it's true that foreign direct investment declined by 12% last year to a level of $1.3 trillion, the slowdown was limited. It was not as bad as we expected because we saw, first of all, investment flows going to developing countries, and the investment flows increased marginally to developing countries, but mainly to emerging markets, to emerging economies. We will talk about these differences also within the group of developing countries. But that was a positive sign. Investors announced new projects in both industry and infrastructure. So the perspectives for 2023 were not as gloomy as we thought at the beginning of 2022. Now, I said that these big trends are full of asymmetries between countries, yes? The major disparities in global investment patterns remain, unfortunately, and these continue to be bad news. The growth of investment in developing countries is concentrated, as I said before, in a small number of large emerging economies. Foreign direct investment flows to many smaller developing countries are stagnant, and investment flows to the least developed countries has gone down by a terrible number of 16% less, 16% less from already, as we know, a very low base. Yes, so least developed countries are being passed by the flows, the investment flows in the world. Similarly, at the sectoral level, if we want to go to make a zoom into this, what is happening at the sectoral level, we saw strong growth in some sectors, such as semiconductors, in response to the chip shortages that we experienced and that the global economy experienced. But this was accompanied by a weak performance in other industries that are very important to build up productive capacity in developing countries, such as the food industry. So we are in a food crisis. We have been talking about the food crisis and food insecurity in the world, and still we see no recovery of investment in the food industry. Moreover, the foreign direct investment in agri-food systems, so important for food security, is lower today than in 2015. Lower today than in 2015. So we see the same contrast when we look at investment relevant for the Sustainable Development Goals. So some sectors have received a lot of foreign investment and they've show a strong performance, but many of the sectors important for the well-being of people and for the achievement of the Sustainable Development Goals are still really lagging behind. The good news is that the international investment activity in SDG sectors in developing countries increased in 2022. But looking at the gains since 2015, progress is still really very modest. What are the sectors on SDG investment that have really showed a strong performance? Notably, renewable energy. But we know that it's going to the developed countries and to the emerging economies. The rest of the countries are not really showing that performance. But renewable energy, no doubt, the market and the investors are showing, appetite for investment in renewable energy. The problem is how it is distributed around the globe, the investment that is happening. But for example, water and sanitation, agri-food system, as I said before, health and education are not doing as well. So these SDG important sectors for the SDG achievements are not doing as well as renewable energy. Now, let me turn to this precise subject of the report. As I said before, what has happened with respect to investing in sustainable energy, and give you some very strong data. So let's put it this way. Developing countries face an investment gap of $2.2 trillion annually for the energy transition. This is more or less half of the funding gap for the Sustainable Development Goals. We have talked about a $4 trillion gap in investments for the Sustainable Development Goals. Around half of it is the investment gap needed for the energy transition. In this energy transition, there are many sectors involved. Yes, we need more efficiency investments, we need the grid, we need the storage. So the part that is for renewable energy of this $2.2 trillion is 1.7 trillion. So most of it goes to the new investment needed for renewable energy. From this number, from this gap, 2022 only attracted direct investment in clean energy of around 550 billion. So, as we say, only 1/3 of the gap needed for renewable energy is being filled by the new investments. So we are making a strong call for massive investment in renewable energy so developing countries can make the energy transition they need. Let me also underline that this is really linked directly to the financial situation developing countries find themselves in due to the cascading shocks that have caused, by climate change, the COVID-19, the geopolitical tensions, and the war in Ukraine. So this has really affected developing countries' capacity to make the investments they need for the energy transition and for renewable energy. So we need to solve these problems. The problem of debt relief in developing countries are really, precluding them from making the investments they need for the commitments that we have made for the climate change, and within the climate change targets, the energy transition. So the fiscal situation and the financial situation of the developing countries are directly linked to the weakness that they experience because in terms of being able to do the investments needed for clean energy. The other point that the report looks at is what happened last year with the rising prices of energy. Because the concern last year was that the rising prices of energy will push in many countries and energy, because of energy security, that will reverse the trends away from the investments in fossil fuels and towards renewable energy. We really had concerns that we will see a regress on that. This is so far, according to the report, not happened to the extent that we feared. Investment numbers and values in extractive industries remain stable in 2022. They didn't go down, but they remain stable. We didn't see a clear tendency of going up. And renewable energy projects, as I said before, reached a record high last year. International investment in renewable energy has tripled since 2015. The problem is the concentration of these investments in very few countries, the developed countries and the emerging economies. And that's the problem that we are seeing. It's not that there is no appetite for the renewable energy projects, it's that they are concentrated in very few economies. In developing regions, it has barely outpaced the investment in renewable energy projects, have barely outpaced overall foreign direct investment and GDP growth. In the least developed countries, as I said before, international investment in renewables has grown by only 1% per year on average, while GDP has been growing 7 times faster. So, renewable energy investments in these countries are not keeping up with the growth needs of that energy demands in renewable energy. Furthermore, there are more than 30 developing countries that have not registered a single international investment in utility-sized renewable energy generation since the adoption of the Paris Agreement. Very sad, yes? 30 countries has not registered a single international investment in utility-sized renewable energy generation since the adoption of the Paris Agreement. So while investors' interest in renewable is strong, other types of investment needed for the energy transition received much less attention, like investment in power grids, storage, and energy efficiency. My last point with respect to this section of the report is the issue of the determinants of investment in the energy sector. The report presents a detailed analysis of the impact on the cost of capital of various degrees of participation in projects by different stakeholders. Importantly, the report shows that investment partnerships lower the cost of debt finance for developing countries. Bringing international sponsors as project owners leads to a lower cost of capital than in purely domestic projects. This is very important because we know that renewable energy projects need upfront investments. And the cost of capital for that is very high for developing countries. So this analysis shows that if we combine international multilateral development banks, government and private sector, that can reduce the spread on borrowing cost for energy investment projects by up to 40%. If we combine international multilateral development banks and government shareholders, that can reduce the spread on borrowing cost in energy investment projects by up to 40%. So lowering really the cost of capital for energy investment makes it urgent to put in place the necessary institutional capacities for these partnerships and the institutional safeguards to ensure that partnerships work for the common interest. The scale of the challenge is enormous, and so is the range of actions needed. The growth of green finance in global capital markets, with sustainable bonds growing 5-fold in 5 years, show that the appetite among private investors to fund climate change action is there. The task is now to channel those funds to where they are most needed to support the transition and to provide affordable access to electricity for all. In the World Investment Report, we are proposing a global action compact for investment in sustainable energy for all. The compact contains a set of guiding principles that consider all 3 objectives of the energy transition: meeting climate goals, providing affordable energy for all, and ensuring energy security, and put forward 6 action packages covering national and international investment policymaking, global, regional, and South-South partnerships and cooperation, financing mechanisms and tools, and sustainable finance markets. All these 6 packages can really help us push forward for this agenda. The recommendations of this report will be the subject of discussion at UNCTAD's World Investment Forum in October this year, taking place ahead of COP28 in the same location because we are going to UAE. This offers a platform for policymakers at the highest levels and for the broadest possible constituency of investment for development stakeholders to translate them into concrete action. And concrete action is urgent. We invite all stakeholders to engage with this report and join us in shaping a sustainable energy future for all, to come to the World Investment Forum in October this year in UAE and prepare ourselves for a successful COP28, trying to get the investment needed for the Sustainable Development Goals and the energy transition to the developing countries. That is what will make the difference for the future. So thank you for your attention.
Thank you very much, Secretary General. I will now give the floor to James Zhan, if you want to add a few elements. James, you have the floor.
Thank you very much, Catherine. I think our Secretary General Greenspan has already given a very comprehensive presentation with quite a number of messages. So I don't have anything to add, but perhaps to give more time for Q&A. Back to
Thank you very
Catherine.
I will give the floor to Tamer in the room. Tamer, can you?
Thank you very much.
Kuna, right? Kuna.
Yes.
Kuwait News Agency. Over to you.
Thank you very much, Ms. Greenspan. Thank you for this briefing. In your opening remarks, you said that you mentioned the food crisis, the international food crisis, but I noticed that the old report is focusing on the energy crisis. It is, in your opinion, the energy crisis is more important than the food crisis?
No, very, very good question. No, it's not more important, but we decided this time to focus on the renewable energy and the energy transition because the food crisis part have been dealt with before. We will re-look at it because according to many of the data that we had before of the low investment in the food systems, that continues to be the case. So probably this merits a new look in terms of the investment impediments that we are having on that sector. But the discussion on energy transition has been very important during these last 2 years. And we wanted to know, first, if we could really say that there was a regress in terms of investment trends. Second, how can we tackle the high cost of capital in the developing world? And third, what are the distributional effects of what is happening? Because many times we go to the meetings at the global level, and everybody is very complacent with what is happening in the renewable energy sector. Yes, because there is a huge investor appetite. You know, sustainable bonds are getting into the market. Funds are, you know, putting rules and norms, also with our support. Yes, to channel investment and have sustainable, conscious investors into the sector. But we want to call the attention that there are many countries that are not receiving any of these flows. That is true that there is, you know, good news in the renewable sector because a lot of investments are happening. But the distributional effects, the asymmetries of the flows have to be put on the table. This is my first response. Now, you know that in the Global Crisis Response Group, it was really interesting when we start to look at the food and fertilizer issues and the energy issues. They are completely intertwined. Yes, a huge cost of the food price is energy in many of the countries. And a lot of the unrest that we started to see in some countries came by farmers through the energy price, not necessarily through the food price. So these are two issues that are really, you know, bound to each other. You know, energy prices have a huge impact on food prices and food cost production in the developing world, especially.
Thank you. Isabel Aliancia Jefe.
Good morning. Yes, it would be a lot of questions after all your remarks, but I'd like to focus on the prospects for this year. We are at the half of the year, so maybe you have something to share on the trends that we saw, how it will continue, and if we can repair the trend of investment, especially in the energy transition going, especially to emerging and developed countries and not to the developing countries that need so much. And I would have a second one, but
Let's ask James, do we have the numbers for 2023 or some indicators of if these trends have continued?
Yes, thanks, SG. We have indicators. We don't have numbers because of the high uncertainty, high unpredictability of the situation. In terms of indicators, we have the greenfield investment project announcements, and that's the indicator. One set of indicators on the project announcements that indicates the investment coming in the coming months or a year or two. The second set of indicators relate to the macroeconomic indicators, that is GDP growth, trade, gross capital formation. So these are the two. Regarding the first set of greenfield investment, the good news is that the project announcements of the deals greenfield increased in 2022. And that increased quite significantly, indicating that there will be a kind of bottom out and towards the end of the year, perhaps, or the beginning of next year, there'll be increase in investment flows. So that's one type of indicator that we have. And we also see the possibility of because of the 2 years of FDI recession, I'm talking about last year and possibly this year. So towards the end of this year and the beginning of next year, there'll be a kind of capital replenishment driven type of investment that will boost investment recovery. And the third possibility relates to because of the asset price going down for due to the kind of sluggishness of growth, there will be possibility of the coming back of cross-border M&As. So these are the indicators. But regarding this year, particularly the first half, the first quarter, second quarter, and third quarter, we'll see that GDP growth is much lower than last year, and the trade growth forecast is almost half. And gross fixed capital formation increased a little bit, but not significant enough to support the strong recovery of FDI. So in essence, I would say this year the prospect remains gloomy, but it can turn from pessimistic to cautious, optimistic prospects towards the end of this year and beginning of next year. And for developing countries, investment flows continue to be resilient compared with developed countries. But greenfield investment in developed countries in terms of announcement of the deals also increased about 35%. Back to you, SG.
That was your question, you know, the trends in terms of developed versus emerging economies, developed countries versus the rest of developing countries continues.
Yes, we follow up for you.
So I would like to take the opportunity of your presence to ask you for the situation of the grain deal after the remarks by Russia that the ships that involved in the trade have to leave the Black Sea until the 17th of this month, and they don't see any ground to renew the.
Yes, thank you. Well, as we have heard the Secretary General, he has expressed his concerns. Yes, and no doubt we are worried because the two agreements signed in Istanbul are very important for food security and for the developing countries in the global south. And let's remember that there were two agreements. There was the Black Sea Initiative for the exports of grain from Ukraine to global markets, and the MOU with the Russian Federation is signed between the Russian Federation and the UN to foster the unimpeded exports of food and fertilizers from the Russian Federation also to global markets. And we need both to continue bringing prices down and have stable markets of food and fertilizers in the world. The United Nations remains committed to making every effort for the continuation of the agreements. They remain our main concern, and we hope that we can ensure their extension for the benefit of the most vulnerable countries and the most vulnerable people in the world. So that is what I can share with you. We will continue during the days that are still left with our efforts to make that happen.
Thank you very much, SG. I don't see any question in the room. I see Laurent Sierot, Swiss News Agency. Can we unmute Laurent?
Yeah, that's done. That's done. Thank you for the thank you for the briefing, and thank you for taking the question. SG, it's a follow-up on what you just said. So are you yourself going to travel to Moscow in the next days, or is a high-level Russian delegation expected here in Geneva? Thank you.
No, the Russian delegation was already in Geneva, and we had consultations not long ago. I forgot the dates, but I will check exactly. But you have them because it was reported in the news. But the Russian delegation was already here, and we will consider, yes, going to Moscow in the days that are left, but that has not been confirmed yet.
Thank you. I see Nick Cumming-Bruce, New York Times Online. Over to you.
Yeah, thank you for the briefing and taking the question. I just wondered if you could explain a little bit why you think there has been so little investment in agri-industry. Is that because of high energy prices deterring investors? And are you saying, therefore, that while we have high energy prices, we're essentially going to see a continuation of the global food crisis? Thank you.
Yeah, can I have somebody of the team that have looked at the food system more in detail? Yes.
Can we give
Amelia,
the mic to?
please come here.
Yes.
Come here. Come here.
Amelia is joining. I will put her name in the chat. Over to you, Amelia.
Thank you so much. So basically, as we show in the report, the investment in the agri-food system has slowed down since the initial, if we compare with the launch of the SDG agenda in 2015, mostly has to do with the issues that our Secretary General outlined, the issues related to underinvestment, but also to additional needs. And also because of the high energy prices had impacted some of the subsectors in the agri-food system. But the good news is that some of the areas in the agri-food system, like manufacturing and food processing, is showing higher announcement of investment, like greenfield investment, as Director Zhan also said, which is a good indicator of the market. So basically, it's a combination of additional needs, but also underinvestment in tandem with the impact of the high energy prices.
Maybe it's important to say also that the new needs have to do also with the adaptation to climate change. Yes, climate change has impacted the sector, and so you will need in the investment new adaptation and new technologies for the crisis. So it's not you have more needs today and less investment coming. Also, let's be clear. Food systems was neglected in terms of national policies for a long time. Yes, and one of the indicators for that is that Africa is a food net importer of food. Yes, we relied much more on trade for food for food access than on national production. And now, because of the disruption in trade, so the discussion has come back about what do we need to do with our food production sector in our countries. And it's an interesting discussion. What is the balance between trade and national production? But it brought again the discussion of the importance of looking for more efficiency and support for the food production systems inside the countries, not only for the commodity trading.
If you allow me to add a little bit more on the efficiency, and it's a matter of concern because if you see the largest slowdown was in research and development, R&D, and also in the technology for food production. So the issue of efficiency and adaptation and to the shocks is a matter of concern. The good news, the flip side of the story, is that developing countries still remain key destination for investment, international investment in food production and in basic food production. So that at least there is here we saw a positive outcome in terms of both project activities, but also in the value of investment, even though if it was not large. But the issue of efficiency remains an issue, and how to continue the trends, the positive trends in terms of fertilizers, pesticides, and other chemicals, which are also important recipients of international investment flows in developing countries.
In July, follow-up of the food summit in Rome. So we will have the opportunity to discuss a lot of these trends also in the summit.
And also at the World Investment Forum, there is going to be a full track on food security in tandem with the FAO, and also these issues will be discussed at the World Investment Forum.
Thank you very much. I don't see any additional question. Thank you very much. SG, would you like to close this press conference with a last message?
Yes, I think that the report shows that still there are a lot of opportunities there, that if we do the right thing, yes, we will be able to channel the appetite of the investors and the investment community towards the developing world, and especially towards the countries that needs the most and receive the least in terms of foreign direct investment. So if we really want to transit to a more sustainable development, to accomplish the SDGs and be able to meet the targets of the Paris Agreement, we will have to put our attention into the countries that are not able to attract the necessary funding for making this happen. And we have made a call also to the international multilateral banks, because they have a very important role here to play to scale up private investment and partner with the governments with the right policy frameworks for scaling up renewable energy investments and to invest in the sectors important for the SDG targets. So let's join our voice in this call, and let's join the compact that we are putting forward with very specific, concrete action points to help the energy transition, the sustainable energy transition for all, and to regain momentum for the sustainable development goals. Let me close saying that we have said once and again, the SDGs are too big to fail. You know, this is the only game in town in the global community that really calls for collective action and a solidarity pact in the world. So we need to be serious about it, and we need to be serious about regaining impetus towards the SDGs. And no doubt, investment is a huge part of the possibilities of success. So I want to thank James Zhan and the division and the team for all the effort and the good work done in this report that is so well valued by the investment community. Thank you all.
Thank you very much. Thank you all for your participation to this press conference. The embargo lifts in 15 minutes, so please beware the embargo. And we'll stay tuned. Other reports will come up in the coming weeks. The whole team, of course, behind James Zhan is available for questions, interviews, or whatever will be needed from you to cover this report. Thank you very much.